That's right, guys. Can you believe this? We're talking about capital gains on our hobby. Even if you have a hobby, you gotta pay the government. They want their share, and it's coming up next. Hey guys, welcome back. MTG Moxman here. Guess what? Today we are having a very uncomfortable conversation, and it's going to be about taxes. Can you believe it? Whatever country you're in, they always say the two certainties in life are death and taxes. That's right. Now, when we started this hobby, I don't know about you guys, when I started collecting Magic, I thought, what a great game. Loved it. I got my pieces. I got my Black Blade. I got all kinds of cards. And I've been buying them for a long time, having a great time. And I never, ever would have thought they're taxable because I own them. They belong to me. I've already paid for them. I've already paid the tax on them 20 years ago when I bought them, which means they should be tax-free as far as I'm concerned. But apparently, that is not the case. Depending on your jurisdiction of where you live, there are all kinds of tax implications when you sell collectibles on the open market. Okay? So, whatever country you're in, your government wants their share of the tax on those items you sell, which I did not know was the case. Some of the patrons, and I got some emails about it. So I have looked into it. I am by no means a tax lawyer, attorney, or know a lot about taxes. Only what I read online and I'm putting up for you guys today. Do not take this as solemn advice. Please declare and check within your own country and jurisdiction to see what rules apply to you when it comes to taxable income on any collectibles you may hold or be holding to sell. How's that sound? That sound professional? Does it sound like I know what I'm talking about? All right. So here's how it goes. When you bought these items 20 years ago and you've had them for a while, some things become worth nothing. Okay? If I bought a deck of playing cards from a Dollarama, and I had those playing cards for 20 years, chances are they're not worth more than the dollar I paid. Okay? So that's not a taxable gain. Unless, of course, somehow I could sell them for over $1,000 in Canada. If somebody I convince to sell for over $1,000, I have to declare that as a taxable gain on my sheets and fill out the forms. And then the CRA in Canada, the Canada Revenue Agency, will get their money. I guess in the States, it's the IRS, right? Will get their money. And there's different taxable amounts for different parts of the world. Okay? In Canada, it's if you sell something and it goes over $1,000. Okay? So if I buy a couch for $500, but I sold it for $1,001, I got to declare the $1. Okay? But if I sold a gold brooch that I bought for $50 in 1950 and I sell it for $50,000, I've got to declare $49,000 of it. Because anything over $1,000. Okay? And if you didn't buy it for $1,000, it just gets bumped to $1,000. That's the Canadian rule. Now that is insane to think about, that they're going to take that big of a chunk of your stuff. Now in Canada, the only thing that's really protected is your first home. If you have your first house, your house is protected. It is tax-free when you sell it. Because that's like, I don't know, that's just your biggest investment. I don't know if that works the same in the States. I couldn't find a lot on it, but in Canada, that's how it works. Your house is tax-free. Your principal residence is sold tax-free. But if I own a second house, I got to declare the tax on the gains of the house. So if I bought a house for $500,000 and I sold it for $600,000, the $100,000 difference has to be declared. It's a lot of strange stuff. I can't imagine selling a box here for $100 and selling it for $1,050. I've only got to clear the $50. But if I bought this box, where is it? Where is it? There, Urza's. I buy that Urza's box for $2,000. I sell it for $10,000. I've got to declare $8,000 on that. And if I can't find the receipt for it, I've got to declare $9,000 on that. So think about that. That is insane to think about, that they're going to take that much money. Now, it goes against your income. So if you have like RSPs and stuff in Canada, or what is it, 401k in the States, to deduct those things against, it will help you out. But still, it's a lot of money to think about. So you have to plan for these things. You have to be aware of what's going on. And this is what the U.S. government says. Key takeaways. Collectibles are considered alternative investments by the IRS. Things that include are like art, stamps, coins, cards, comics, rare items, antiques, and so on. If collectibles are sold at a gain, they will be subject to a long-term capital gains tax of 28% if disposed of after more than 1 year of ownership. You need to know your cost basis to calculate your taxable gain, and that means the price paid plus any costs, fees, and commissions involved in that purchase. United States of America. Wow. Let me tell you, that right there is kind of like, that's freaking me out to think that that kind of money, 28% of whatever you profited on is gone right off the top. That is something to think about. It really makes you want to pay more attention, at least I do, about how I decide to dispose of my stuff. Because I have to declare this stuff on my taxes. I'm going to have to fill out the forms, fill out the excess income, state what it is, and then do it. Now, I haven't sold anything of real note of value for a long time, but it makes you realize you probably want to sell before it gets to $1,000. Unless you're a rich person who can afford to take the hit 20 years down the road. Like, if I was selling over $1,000, I got to pay. Maybe I want to sell that box when it gets to $1,000, right? Because then I don't pay anything on it, at least in Canada. So that's crazy to think about. Now, an example I left up here for you guys. Let's say you bought a Black Lotus in 2002, okay? And you bought it for, let's just say, $1,000. Now, you sell it in 2021 for $30,000 because of all these crazy gains. That means the amount of tax declared is $29,000 on your taxes in Canada, and it's set against your income. So in Canada, you have to declare $29,000 gain because you sold something for over $1,000. Okay, and if, let's just say you bought that Black Lotus for $500, they immediately assume it's $1,000 if you don't have a receipt, so you can just bump it to $1,000. But that means $29,000 gain, and the government's going to take about 25% of that in tax, generally speaking, is what I've read up on. So 25% of that Lotus is going to the government. And that just blows my mind. And you got to declare this stuff. Like, they know if you get a PayPal fee going in, right? They know if you've got money coming into your accounts, guys. Unless it's some kind of cash transaction, they know, and you should declare all taxes to your government. Because that's how the government makes money. That is crazy. And it just, I sat there when I actually started reading into this and looking in, you're like, this is blowing my mind. Like, I never knew. So now I've been taking a few notes. I've kept some websites on my tabs. So whenever I do this stuff now, like, I knew my Patreon's got to be taxed, okay? And it's taxed against, so I basically have to keep 50% of it aside to pay taxes for this whole year, okay? Which means most of Patreon money, 50% is going to the government. My YouTube stuff, AdSense, is already taxed at source to the United States government. So they're already taking a chunk of it, and then I have to clear the rest here in Canada, and they're going to take a chunk of it. So thank goodness I have a lot of loyal people who are watching my videos every day. So I still get to make about, $1 a video, $2 a video, which will help pay for equipment and upgrades as we go through. But it is very funny to see all this coming down, and I had, literally no clue. None. Until you guys started mentioning on my channel that I should be looking at this stuff, I didn't know. And now I just go, wow. And I think about it, and I mull it over, and I look at a stack of cards, and I go, I've got to figure out what all these are worth. And years from now, if I sell these glacial chasms for money, I've got to make sure I put that money aside, pay the government their share. So it means a whole new set of spreadsheets to create. So I can work out the tax implications later on. That is something to definitely be aware of. All right? So I hope you have a nice takeaway about this, about how taxes work, because this will affect you going forward if you are paying your taxes in a country that has taxable gains on these type of collectibles, okay? So keep that in mind. Thanks a lot for tuning in. This is MTG Moxman. You guys have a great one today. I look forward to seeing you all tomorrow. That's right. Another day, another Moxman video. And if you're new to the channel, smash that subscribe button and join in the fun. It's free to do. And when we get to 5,000 subscribers, we get cake. And at 4,000 subscribers, we get pie. That's right, pie. Hey guys, big shout out to my patrons, man. You guys rock. We got Bobby Z, we got Bash, we got B Jones, Stephanos, Michael P, we got James P, we got David M, we got Richard, we got Ty. You guys are amazing. Tristan rocking it out. Thanks again, guys. I know, right? I've been cleaning up the basement. I'm getting ready for the live stream this weekend. It's not looking bad. I mean, we still got some cobwebs and stuff, but I'm cleaning up. I'm getting ready. I got Tony Stark locked up. We're good. I'm cleaning. I'm working. I'm getting stuff done.